have joined, we can commence. Good afternoon. Yes, Judge.
Just a minute, I couldn't switch on my video. I'll just go out and enter back. Sorry for the inconvenience.
Okay. Okay, then we shall commence with the rounds. Before starting, I would like to sincerely apologize to the judges and participants for this delay. So we shall begin. Good afternoon and welcome to the 21st edition of the Nani Palkhivala Memorial Virtual Tax Moot Court Competition of 2026 conducted by Shastra University School of Law. This is the final round of the competition and I am the court manager of this court hall. The judges for this round are Mr. N. Venkatraman, Mr. P.H. Arvind Pandian, and Mr. R. Parthasarathy. Shri N. Venkatraman is the current Additional Solicitor General of India and a designated senior advocate who appears in the Supreme Court and multiple high courts all over India. Shri P.H. Arvind Pandian is a senior advocate of the Madras High Court and former Additional Advocate General for the state of Tamil Nadu. Shri R. Parthasarathy is an advocate on record at the Supreme Court of India and a registered patent agent. We welcome you, sirs. I would also like to welcome the participants for this round. Team Code 1 is the appellant and Team Code 14 is the respondent for these rounds. Now, I hand over the session to the court clerk for further instructions about this round. Thank you.
Good afternoon. I'm the court clerk for this final round. The appellant speaker 1 will speak for 21 minutes and speaker 2 will speak for 22 minutes. The respondent speaker 1 will speak for 20 minutes and speaker 2 will speak for 25 minutes. Warning will be shown through placards for each speaker at the start and when 12 minutes, 7 minutes, 5 minutes, 2 minutes is left and when the time is over. Please note that surrebuttals shall be allowed only at the discretion of the judges. Now, if the judges permit, the speaker one from the appellant side shall start their arguments.
Yeah, please go ahead. Yeah.
The appellant can start their arguments. TC1.
Yes, TC1 is here. It seems that speaker 1 is facing slight technical issues. Could you please give us some time for speaker 1 to start?
Please join quickly.
Yes, please start.
Respected judges, we would like to apologize for the delay. Kindly wait for a few minutes.
Oh,
Are you ready?
I just wanted to check whether my audio quality is clear or not.
Yeah, you are
Yes,
audible.
sir.
No problem.
Yeah. Accomplished. If your lordship's permit, I'll just proceed with my arguments.
Yeah.
Obligation. This is team number 01, and the council is here appearing on behalf of the appellants. If your lordships are well versed with the facts, the council seeks to directly proceed to the arguments. Obligation. Notes for the kind information of the bench, the council myself will be dealing with issue number 1, 2, and 3, and my co-counsel will be dealing with issue number 4, 5, and 6. With the lordship's permission, I'll start with the first issue. Publish merits. My lords, with respect to the first issue, it is indeed my humble submission that the non-compete fee of 18 crore rupees paid by me to and another entity called as Intuitive Tech falls under the expression of a revenue expenditure under Section 37 subclause 1 of the Income Tax Act 1961. Before getting into more detail, I would like to begin my submission by briefly stating what does a revenue expenditure and a capital expenditure mean. A revenue expenditure is any expenditure which falls under Section 37 subclause 1 of the Income Tax Act. To be more specific, Section 37 subclause 1 of the Income Tax Act says that any expenditure which doesn't fall under Section 30 to 36 of the IT Act, as well as the expenditure which is not in the nature of a capital or in a personal expense-oriented expense, can be considered as a revenue expenditure. Because on the other hand, on the contrary, with respect to capital expenditure, the determinants are drawn from various judicial precedents. And one of the most important one among them would be the Honorable Supreme Court's position in Sharp Business Systems versus Commissioner of Income Taxes. Because in this particular matter, in Sharp Business System, the Honorable Supreme Court has very clearly ruled that any expenditure made by a company, if it tries to alterate the profit apparatus or if it alterates the fixed assets of the company, only in that particular case it can be determined as a capital expenditure. So the ratio of the court is very clear with respect to
How do you say it doesn't interfere with the profit making apparatus? You are actually benaming somebody from entering business, so it'll enhance your operating structure, it'll operating profit. How do you say that?
Well, according to the Honorable Supreme Court, the legal inference that can be drawn from the Sharp Business Systems is very simple. Only if the production capacity increases, it can be considered as a capital expenditure. On the other hand, a mere increase in production cannot be considered as a capital expenditure. It should only be a revenue expenditure. I'll just give a very clear example. Well, for example, this non-compete agreement, my lords, I've paid around 18 crore rupees in order to purchase this agreement. And according to this non-compete agreement, only for a limited period of 5 years, I'm able to ward off a competitor from the market. Yes, I completely accept with the fact that while warding off this competitor, my customer base might increase. But however, this customer base increase will only result in the increase in profitability of the business without affecting my fixed assets. What the Supreme Court says in Sharp Business Systems is very simple. It says that alteration to fixed asset needs to take place.
How will you increase your turnover, your consumption, your marketing reach, your profits without improving your infrastructure?
Because I'll just
You are
provide
already
a
on the result.
well, I'll just provide a very practical analogy to substantiate my submission. Well, for example, if I own a company and I have one machine with me, and that machine can produce around 10 units of goods, but I normally only produce around 5 units of goods. For example, let me say I'm making an expenditure on marketing. I'm just spending some amount of money for marketing, and thereby my demand is getting increased. So, my lords, in this particular perspective, I can increase my production to from 5 to around 10 units. So in this perspective, my production capacity or infrastructure need not be necessarily increased. But however, my production can increase, my profitability can increase. So that is where the thin line of difference is actually. So that's where the Honorable Supreme Court has made this thin line of distinction. So my submission is completely being rested upon this particular sense. So if your lordship is convinced, I'll just move on with my submission.
Just one other point. Because you're not having a competition, is it not possible that you will be able to increase the price substantially and therefore your profitability can increase? And whether that aspect also is considered in Sharp Business?
My lords, yes, my lords. Indeed, what the Honorable Court in Sharp Business says is that just because a company enters into a non-compete agreement with another company, it does not necessarily mean that monopoly will subsist. It does not necessarily mean that competition will completely be eliminated. Competition can be warded off, but it cannot be eliminated. Unless and until there is healthy competition in the market, prices would be definitely be determined by the market forces. And therefore, my lords, with respect to the individual determination of prices and predatory pricing, it can only be in the case of a monopolistic situation, which cannot actually happen with respect to the present case. The Supreme Court has also acknowledged this particular matter. If your lordship is convinced, I'll continue with my...
Go ahead.
Obligation. So, my lords, so therefore, my lords, with respect to the first issue, the revenue's contention on this non-compete fee eliminating competition or it providing me enduring benefit is completely unsubstantiated. Because, my lords, I've already submitted that competition cannot and will not be completely eliminated. It will only be warded off to a certain extent, which will not provide any monopolistic market, which the Honorable Supreme Court has also acknowledged in Sharp Business. And also, my lords, while talking about enduring nature, the enduring nature of a transaction alone cannot be a sole determinative factor, is what the courts through various judicial precedents have already noted. Because especially, I would also wanted to draw a reference from the Honorable Supreme Court here, where the court has said that enduring benefit from any arising from any transaction, especially if it is not in the capital field, cannot be considered as a capital expenditure. So the exact ratio has been provided by the Supreme Court in sharp business systems. So therefore, my lords, it is with respect to these factors, this is my humble submission that this non-compete fee of 18 crore rupees paid by me is completely within the parameters of a revenue expenditure, and therefore it needs to be allowed under section 37 subclause 1 of the Income Tax Act. If your lordships are convinced with the first issue, I'll proceed to the second issue.
Go ahead.
Yeah, go ahead.
Lords, with respect to the second issue, it is also my humble submission that the consideration fee of around 1.2 million euros paid under the TSDA agreement would not constitute royalty payment. Lords, the term royalty is being defined under section 90 subclause 1(6) of the Income Tax Act, as well as under article 12 subclause 3 of the India Switzerland DTAA. But however, by the virtue of section 90 subclause 2 of the Income Tax Act, it will only be the most favorable definition that would be applicable to a SSC. And here in this particular case, the definition of royalty, which has been provided under Article 12 subclause 3 of the DTAA, is only more beneficial to me in this particular case. So therefore, my lords, it would only be applicable by the virtue of section 90 subclause 2 of the Income Tax Act. So, my lords, considering the definition of royalty as being provided under Article 12 subclause 3 of the DTAA, it clearly says that royalty is the consideration which is charged for the use or the right to use a copyright or patent or and etc. and other intellectual properties. Because what needs to be noted here is that this particular phrase, right to use or use of a copyright, has been particularly interpreted by the Honorable Supreme Court in Engineering Analysis versus Commissioner of Income Tax. Because basically, the Honorable Supreme Court in Engineering Analysis has drawn a distinction between use of a copyrighted article and sale of a copyrighted article and sale of the copyright itself. What's the basic difference?
Revenue is raising two objections.
Indeed.
It's that this is a secret process, so technical and advanced, and it can be worked only for your use. Your page 18 of their pleading says. The second objection is this is not a standard consumption of a copyrighted article.
Indeed.
It's an in-house assistance which in turn generates its own outputs.
Indeed.
Therefore, the engineering analysis of the standard test of copyrighted article versus copyright won't apply. These are the two major objections. What is your response for that?
My lords, at point number 1, my lords, I would wanted to completely disagree with the secret formula or the kind of technical advancement that this particular material has. It is completely unsubstantiated in the facts. It is only the contention of the revenue in this particular case. My lords, with respect to
does this do?
It's only an analytical database, knowledge. For example, if I produce a particular product, I can actually test it using a particular testing formula, and the results can be interpreted by using this analytical formula. So basically, my lords, the guidance, for example, any copyright or any article or any book, we can just take any material, any educational material, my lords, it definitely comes with a user agreement within it. Definitely, my lords, it would come with a kind of a customer support along with it. Let's take any kind of a material. For example, if I buy a software product, it would definitely give me another disclaimer, or it would give me a user guidance or something, so some kind of an assistance in order for me to properly use the particular product. So that kind of an user guidance cannot be equated with the technical skill or a technical know-how. So that is what the distinction what we have to be drawing up here. So, Manoj, here in this particular case, it does not involve any particular technical skill or any particular technical advancement, even if the case that if there is any involvement of any technical skill or technical know-how, such skill needs to be transferred in order to attract royalty. So that's what Article 12 subclause 3 actually says. But here in this case, there is no transfer of any such technical skill or technical know-how. So that is what my point is here all about. And also, referring to the facts, Melos, I do accept the fact that it has been provided that we have been given continuous training, periodical reviews, and validation outcomes by the parent company. And also, one of the senior technical expert has been deputed into our facility to provide us in-house training. Well, it's all these falls
Before
under
that subject, I want to ask a question when you raise the third point. That's the precise point. When you address the third point, raise it. Go ahead.
And, before I think he proceeds, just wanted to also see it says it's a proprietary analytical database. Okay. Any database comes under literary work as far as the intellectual property is concerned. Therefore, it becomes a copyright. And the definition only says that the use of the right to use a copyright. Therefore, the fact that it is proprietary and therefore they are giving you an exclusive right to use that analytical database in order to interpret. Otherwise, whatever you do with your reagent, what is the result? How to interpret it? You require that particular database. So why is it not a right to use a software or not a software, a copyright? I would put it as a copyright. So that is one aspect which I am not very clear about as to why you say it is not a right to use a copyright.
Well, this phraseology, right to use a copyright, has been particularly defined by the Supreme Court in engineering analysis. According to the Supreme Court, this right to use would only include any transaction in which the copyright itself gets transferred. Let's, for example, if I own a book, let me just take a particular book with me, Malaz. If I own a book with me, and if I sell this particular book to another person without giving him the right to commercially exploit it or reproduce it, this is called as transfer of a copyrighted article. That does not get covered under Article 12, Subclause 3, within the definition of royalty, according to the Supreme Court itself. On the other hand, if I try to sell my the right I hold in this book itself, because for every copyright, my lords, the owner gets a right under Section 12 subclause A as well as Section 12 subclause B of the Copyright Act. He gets the exclusive right to reproduce it. He gets the exclusive right to exploit it, commercially exploit it, and so and so. Only if these rights, specifically if these rights are being parted with another person, royalty can be attracted. Just a mere sale of the product itself without producing any exclusivity upon that particular transaction, royalty cannot be accepted. And Maloj, I would also wanted to refer with what your lordship has asked me. There is no exclusive transfer of sale because it's been very specifically provided in the facts of the case, especially Maloj. For your lordship's convenience, I would wanted to refer to a moment, your lordship. Because in para number 6, it's very clearly provided in the Moot proposition. During the year, CARE Bio paid 1.2 million to CARE Global for services under the TSDA. The TSDA expressly withheld any right in CARE Bio to commercially exploit, reproduce, sublicense, or modify the database or underlying intellectual property. There is also no case of exclusivity which has been provided here. It's not been provided in the fact that exclusively this material has been transferred to them. No, it has not been provided. It has only been transferred to them, but that is not in the exclusive nature. So, indeed, Manoj. Manoj, with respect to the deputation of the technical staff, Manoj, I would wanted to very firmly submit that this deputation is only in order to provide me certain user guidance as well as certain customer support, which is particularly protected by the which was also ruled by the Honorable Supreme Court in CIT versus Amazon Web Services, in which the court has very clearly ruled that the mere transfer of customer guidance and customer support cannot be determined as transfer of technical skill or technical know-how. I'll also read the necessary paragraphs. In paragraph number 8, subclause A, it's been provided that the specialist conducted intensive in-house training at country A's local facility. And under paragraph 8, subclause B, it is also provided that he has provided us hands-on guidance on interpretation of test results using CARE Global's analytical protocols. At point number 1, I'll completely agree with the fact that the duty of care that has been provided to us is actually higher than the market standards, because customer guidance usually comes in a remote or in another online kind of a medium, but here technical staff itself has been deputed in order to provide us these services. It's a somewhat a kind of a extra kind of a care that has been provided to me by my parent company. But what needs to be noted here is that the relationship between a parent company and a subsidiary company needs to be noted into account. Because these services have been purchased by me from my parent company. So a parent company will definitely have the obligation to bring in their subsidiaries within the standard of quality that they usually offer in a worldwide basis. So this was also squarely covered by the Honorable Supreme Court in DIT versus Morgan Stanley, where the court itself has acknowledged that it is a usual practice in corporate law for parent companies to take extra care with respect to the quality and assurance with respect to this.
Morgan Stanley is for intra-group services. This is not an intra-group. This is not a sort of a loan or a lien type of a service. This is a technical output which you finally hand it over to him for exploitation. To combine both the nature of royalty payment and the person coming and doing, if we combine both, why should we not say there's a service fee? That's all.
Manoj, with respect to the service fee, it falls under my third issue, but I'll also provide answer to your lordship's question. Manoj, with respect to service fee, there are two factors that needs to be satisfied. The first factor is the duration through which the employee stays within the country. And in this particular case, Manoj, he is actually staying for more than 95 days or close to 95 days, which has actually reached the particular threshold. But however, there is also another additional threshold which has been provided by the Supreme Court in DIT versus Morgan Stanley, where the Supreme Court has said that the Supreme Court has delineated between two types of activities. The first kind of activity is called as a stewardship activity. And in this stewardship activity, only training is being provided to the employees of a company without actual participation by the employee itself. On the other hand, there is another kind of a function called a core function, where the employee himself takes the shoes and he goes in and he actively contributes to the firm's output. Manoj, but here in this particular case, this specialist only provides training, which is very explicitly provided under para number 8 of the Moot proposition, which clearly states that the specialist only conducted intensive in-house training at country A's local facility. Further, it also says that he has provided hands-on guidance on interpretation of test results using CARE Global's analytical protocols. So therefore, Manoj, any contribution, if at all any, which has been provided by the specialist has only been provided in an indirect manner, which only falls within the parameter of a stewardship activity. It doesn't fall within the parameter of a core activity. So lordships are convinced with my second issue. I hope I've also posted my arguments for my third issue. Obliged, Manoj. So Manoj, I'll just provide a summary of, since I only have around 5 minutes left, I'll just provide a summary of the three issues. Manoj, with respect to the first issue, it is indeed my humble submission that the non-compete fee paid by me is only a revenue expenditure, and therefore it needs to be allowed as a revenue expenditure under Section 37 sub clause 1. And with respect to the second issue, Manoj, this consideration of 1.2 million euros paid under the TSDA agreement does not fall within the ambit of royalty, and therefore it should only be considered as a business income. And with respect to the third issue, my lords, since the service fee threshold, although the service fee threshold has been breached, but since it cannot be proved that the activities fall within the parameter of a stewardship activity, service fee cannot be attributed with respect to the present case. If your lordships are convinced with my submissions, my co-counsel will be taking over with issue number 4, 5, and 6. Obviously.
God bless you.
Thank you. Thank you. Thank you.
The counsel seeks permission to approach the dais.
Go ahead.
Yeah, go ahead.
The counsel seeks permission to address the bench collectively as your lordships. Since my co-counsel dealt with the previous three issues, I'll be dealing with issue number 4, 5, and then 6. If your lordships permit, the counsel will first deal with issue number 6 and then move forward to issue number 4 and 5.
Okay.
What's your pleasure, lordships? So issue number 6 is whether the reassessment proceedings for assessment year 2018-19 were validly initiated and concluded in conformity with sections 148A and 151 of the Act, and whether the RMS, the risk management system, and audit inputs relied upon the revenue constitute information within the meaning of explanation 1 to section 148, so as to displace the plea of change of opinion. The lordships, I would like to humbly submit to this honorable court that this reassessment proceedings for the year 2018-2019 was not validly initiated at all. The lordships, yes, we do accept that under explanation 1 of section 148, the risk management strategy would indeed amount to the ambit of information, and that the stage theory itself provides, that we do accept, your lordships. But if you could please refer to the clarifications 10, 18, and then 19 respectively, your lordships. I will just read it aloud. So it clearly states that RMS alerts are system generated. They do not disclose the exact trigger. They are without any annexure or detailed explanation. And clarification 18 provides that since RMS alerts are generally generic, they do not disclose any underlying data or specific material to the assessee. The RMS alerts do not disclose or indicate the use of new underlying data. The same could even emanate from the details already shared during assessment. The lordships, our submission here is that the RMS that did flag that certain income has escaped the assessment, that has arisen from the information that was already provided to the revenue in the year 2018-2019 itself. And given the fact that they are changing their own stance with the information that had already been provided to them, this would amount to a change of opinion. The Lordships, yes, we do accept that with the Financier Act 2021, that the regime has been changed for the revenue to open the reassessment order from a reason to believe to that of a higher threshold information. But we do need to understand.
It's a lower threshold. From reason to believe, it's the lower threshold, not a higher threshold.
Much apologies, Your Lordships. Okay, so a lower threshold, which is the information. But here we do need to accept that even in that case, the assessing officer has to actually apply its mind, and he cannot hide behind the fact that the revenue has given so and so flagging. That
Got it.
Exactly.
One question. See,
Yes.
now stimulation is actually as that of an AO. So if you have planned focused mechanism to identify and spot what a human mind, I'm not talking of AI now, because it system even earlier to that. You have programs, you have programmed it in such a way that how a human mind will detect, a machine detects it and gives it to you. And if it is a deduction which is later in time, like that of a human mind, though done by a machine, it's only 148 AD now reason to believe substitute information. So how do you say that it is not acceptable?
Much obliged, Your Lordship. So answering to your question, where we are stating is that there is no satisfaction that has been provided. Yes, we do agree that it does think like the assessing officer. But here the fact is that the informations, as in the documents, were already furnished in the 2018 to 2019 year itself. There is no actual provision or a actual providing of any new information that had triggered the RMS. So this has already happened in 2018, 2019 itself. And this is the exact same thing that is happening here. And that is exactly why we are stating that the AO even then has to apply his mind and has to state the reasons independently of that of the trigger of the RMS. And he has to state, and only when he does this, we can accept that it is not a mere change of opinion. Lordships, in the Delhi High Court, in the case of Sapphire Foods India Limited versus ACIT Delhi in itself, this High Court has clearly stated when the assessment order is again open, even though it is triggered by an RMS, if it is done with the same information that is being provided, then it would amount to a mere change of opinion. And we know that as per given the Kelvinator case in the Supreme Court, that a mere change of opinion is not allowed in Lordships. It cannot be taken since it would amount to reassessment and not a mere review. Here, Your Lordships, thus we would like to humbly submit that given the fact that this reassessment proceedings was done with the already information that they had existed, although yes, it was triggered by an RMS, independent satisfaction should have been provided. And Your Lordships, if you could also refer to the clarification 20, it clearly states no independent satisfaction note by the sanctioning authority was provided. So here, what is taking place is that with the same RMS trigger, what had already we had submitted, that is what they are giving it to us. And here, this system itself raises the question.
Are you saying no sanction has been given at all for this case?
No independent satisfaction. The clarification 20 has been provided, Your Lordship.
No, independent satisfaction is different from approval. Has sanction been given or not?
Yes, approval has been given, yes, but we are stating that independent satisfaction has not been provided. We are stating that it should be provided, and also the fact that the reasons as to why the assessee reached such a conclusion, that was also not provided to us, Your Lordships. And here this raises a very important question. If the revenue department is allowed to reopen this assessment orders again with the information that has already been provided to them, where does the finality end? Lordships, the respondents will state that in the 2018-19 application of mine did not exist, and thus this will not amount to a change of opinion. Lordships, but we humbly request this honorable court to ascertain as to where is the finality then. If this is not the fault of CARBAO, and revenue department should have taken significant measures to ensure that this does not happen. Given the fact, how is it we are at fault, Your Lordships? And thus we would like to humbly conclude that the reassessment proceedings for the assessment year 2018 was not validly initiated. Given the fact, although it amounts to information, there was no independent satisfaction, it amounts to a change of opinion since no new information was provided. Your Lordships, if you are satisfied.
One small question. Now,
Yes, Your Lordship.
now there is the explanation. Let's say it is more like a deeming fiction. If there is a RMS and this throws up, or there's an audit objection or anything, then it automatically becomes like information available that says that income has escaped assessment, and therefore they can automatically initiate. Is there a requirement even to have another a record or something to show, yes, there is a requirement to do that? Then the whole purpose of this RMS flagging, etc., irrespective of the RMS flagging, you still have to go into it and provide a valid reason for reopening the assessment. Is that what you are contending?
Much obliged, Your Lordships. To answer your question, in a let us take a case, Your Lordships. If it was a case where the RMS occurred due to the furnishing of any new information that was provided by CARBIO, or any information that was not provided by them during the assessment year 2018 to 2019, then this will not be applicable. But here in this case, what has happened is that the RMS triggers emanates from the data that they already had. Given the fact that it was not furnished by any new information as in any new documents that the CARBIO had provided, or anything that the revenue had themselves not ascertained, that is what we are stating, that this would amount to a mere change of opinion. Your Lordships, is it satisfied?
Yeah, go ahead. Yeah.
Much obliged, Your Lordships. The council will now be moving forward to issue number 4. Much obliged, Your Lordships. So issue number 4 deals with whether in facts and in law, CARBIO was under an obligation to deduct tax at source under section 195 of the Act on the TSDA payments in view of section 90 clause 2 of the Act and the applicable DTA provisions, and whether the consequent disallowance under section 40A clause 1 of the Act has been correctly upheld.
Did
Your Lordships,
did you go to the officer and apply TDS, or you have not done? What is the fact?
Your Lordships, could you please come again? I couldn't hear properly.
Did you go to the officer, TDS officer, applied for it, or you have not approached the officer at all in this case?
Much obliged, Your Lordships. Yes, in this case, we have not approached the assessing officer under section 195 clause 2. Yes, we do agree. I'll come back to the same thing, Your Lordship. So now section 195, we know that section 195 will be attracted only if such income is chargeable as a tax, is chargeable under the tax. Your Lordships, and here, yes, we do accept section 195 clause 2 exists as a measure. If the assessee has any doubt to understand as to whether this will, whether he has to deduct it at source or not. Your Lordships, if I could please refer to the provision and read it out aloud.
No, the revenue is saying in their pleadings, this self-certification is no ground. You should have approached us. That's the case.
Much obliged. Exactly, Your Lordships. To substantiate the fact that the revenue stating that we had to approach them, we would like to humbly submit that we had absolutely zero obligation to approach the revenue and ask them under section 195 clause 2. Your Lordships, I will just substantiate that statement. So what has happened is that as my co-counsel has already dealt with the facts with issue number 2 and 3 stating that this would not amount to royalty and that this would not amount to service PE, we had certainment that we do not have to deduct tax at source. If your Lordships could please refer to the case of GE India Technologies NP Limited versus CIT on 9 September 2010. So the Supreme Court, in the case in itself, they have talked about the Transmission Commission case, where the Supreme Court held that they had to approach the revenue in every situation in order to understand 195, in order to understand whether it is deducted at source. But here in this Supreme Court case, the Supreme Court has clarified that if the assessee has absolute certainty, if he has no doubt that he should, he does not have to go and deduct tax at source, it is not necessary. Lordship, I will just read the specific provisions. So under paragraph 7, this states, the Supreme Court has stated, the application of section 195 clause 2 presupposes that the person responsible for making the payment to the non-resident is in no doubt that tax is payable in respect of some part of the amount to be remitted to a non-resident, but is not sure as to what should be the portion so taxable, or is not sure as the amount of tax to be deducted. In such a situation, he is required to make an application to the TDS for determining the amount. It is only when these conditions are satisfied and an application is made to the ITO that the question of making an order under section 195 clause 2 will arise. Lordship, so the Supreme Court has clarified the stance stating that if the assessee has certainty, if they do not have any doubt that their income will not be taxed on a TDS, they do not have to go and approach the revenue. And that is exactly what has happened here. We were under the impression that it does not conform to royalty, and thus we did not have to use a Section 195 clause.
So everyone will therefore believe they don't have to go to the AO because everyone will believe it's not taxable. So how does the Commission operate?
Much obliged, Your Lordships. Again, this threshold is what has been clarified by the Supreme Court, where it states that yes, we do agree that an individual person does not have the right to, an assessee does not have the right to legally determine under which head their tax would fall on. But given the fact that here the assessee should have believed in order for Section 195 clause 2 to arise, so that is the condition that has been laid forward by the Supreme Court. So the assessee should have believed that some part of his income should have been deducted at source, and only then Section 195 clause 2 will be attracted. Your Lordship, so to conclude the issue number 4, I would like to humbly submit to this honorable court that given the fact that this does not conform to royalty, that we had absolutely certainty that we did not have to deduct the tax at source, and hence we did not approach the revenue themselves under Section 195 clause 2, and thus the CARBEO was not under an obligation to deduct tax at source in pursuance of Section 195. Lordships, if you are satisfied, the council will move ahead to issue number 5. What's your pleasure, Lordships? So now issue number 5, the question is whether where the assessee tax on the doubly taxed income is nil after set-off of brought forward losses. FTC is admissible under Section 90 of the Act, read with Rule 128 of the Income Tax Rules and Article 25 of DTA in particular, whether Rule 128 Clause 5 operates to bar the grant of credit and refund in a nil tax situation and requires the ignoring of foreign tax to extent it exceeds treaty permissible amount. Your Lordships, here we would like to humbly submit to this honorable court that CARBEO was indeed under he had every right for them to be refunded the 32 lakhs as the FTC. Lordships, here we need to understand that there exists a difference in the terminology that is being used in Article 25 of the DDAA and that of Rule number 128 Clause 5. Article 25 of the DTA clearly states tax attributable to the income, and Rule 128 Clause 5 states tax payable. Lordships, here we need to understand that there exists a vast difference between tax attributable and that of tax payable as subject to tax. Lordships, we would like to humbly submit that tax attributable refers to the income where, for example, if a foreign income has entered into the domestic territory, and if such an income is treated as to be taxed on, if the revenue themselves treated as that income to be taxed on, that is tax attributable.
Point is this.
Yes.
The transaction is taxable in India. In your case, you had brought forward losses, and therefore you reduced it, and it ended up in a loss. Therefore, you couldn't pay tax. Otherwise, the transaction is taxable. So, in that scenario, FTC would have been extended if your transaction, if you have paid tax. Now that you brought forward losses, liquidated your profits, you didn't have a chance to pay tax, so there's no double taxation at all. Why should FTC be refunded to you? That's the question.
Much obliged, Your Lordships. So again, the concept that Your Lordship has put forward, it amounts to tax payable, which is what Rule 128 Clause 5 states. It is the last, which is the subject tax. Your Lordships, but Article 25 talks about the tax attributable. Here, what we are stating is that the source of income on which the revenue would treat that as a tax, would treat that as an income on which to be taxed on, that would be tax attributable. Here, I would just like to sum up the facts of what has happened. So, we have paid 32 lakhs in country C. And now with country A, we did offer to pay the taxes. But here, what has happened is that we have set off of the brought forward losses. Your Lordships, here our substantiation is the fact that only because the revenue treated that 32 lakhs as an income to be taxed on, we were allowed to set off the brought forward losses. So the fact that we set off for brought forward losses, we used our vested statutory right, and the revenue themselves have treated it as an income that could be taxed on. Thus, this 32 lakhs would indeed amount.
So it's a good point. You're taking a very fine point. But the point is this: it is taxable, and that's why they gave you the
Yes.
allow you. But you have ensured that you don't pay it not because it is non-taxable, because you got forward losses and therefore you didn't have an occasion. You eclipsed it. In such a situation, should refund be granted? That's the question.
Much obliged, Your Lordships. Exactly. So the fact that our income was treated as an income to be taxed on, the fact we were allowed to set off our brought forward losses, that amounts to tax attributable, which is provided in Article 25. So here we have the clash between Article 25, which talks about tax attributable, where it is a gross income during the computation itself, and tax payable is what your lordship is referring to, the fact that that we did not have any income to be taxed on. But your lordship, that is tax payable, whereas we are referring to the fact that it is tax attributable, and that is what has been provided in Article 25 of the DTAA. Your lordships, we know that when that
Are you
yes.
saying attributable is distinct from payability in what sense?
Yes, Your Lordships, much obliged. So we are stating that tax attributable and tax payable is different in the sense that tax attributable refers to the gross income during the computation stage itself, where the revenue treats it as an income to be taxed on, whereas tax payable is the final amount to be taxed on.
Is it, what is your case? The way I understand is simply, so long as I've included that foreign income as part of my total income, and whatever may be the final result because of the carry forward losses or not, that amounts to that income having been offered to tax, and whatever tax is required to be paid, which happened to be nil in this case, therefore I'm entitled to. That's precisely, I think, the point which you are making. Is my understanding correct?
Yes, Your Lordships, to add on to it, I would like to also state that double taxation has already occurred in this case, because we have paid our taxes in country C, and that only because that 32 lakhs was treated by the revenue as something to be taxed on. We were allowed to set off our brought forward losses, and because of the fact that this yes.
You came very close to making your point, but possibly missed one. See, this is a case where there is no double taxation. You have your income in India is now subsumed with the loss. So the situation of a credit scenario which arises only when tax is payable is not there at all physically. So how do you address this the question?
Yes, much obliged. So I would like to substantiate by saying that double taxation has occurred the moment we use that 32 lakhs to set off the brought forward losses. Again, because the only reason we were able to do that was because the revenue treated it as something that could be taxed on. And this is why we are stating that double taxation has indeed occurred. And that is why we are stating we are eligible to use the definition of the Article 25 DTAA. Lordships, if I could move to the second limb of the argument.
What is the prayer only, you know? What is this?
No, Lordships, I'll just conclude the second limb. Okay, so what has happened is that Article 25 talks about the tax attributable, and Rule 128 Clause 5 talks about tax payable. We have already differentiated, and we have stated the only reason it's tax attributable is because the revenue indeed treat that as an income that could be taxed on, that which we use at a set of brought forward losses. And here, since there exists a clash between the DTAA and that of a Rule 128 Clause 5, which is a subordinate legislation to add, we would like to take the section 90 clause 2, which clearly states that when there exists a clash between that of treaties like the DTAA and that of the provisions that is more applicable into benefit the ICC would come into play. And thus here we would like to humbly submit to this honorable court that that we are indeed entitled to receive the FTC 32 lakhs since double taxation has occurred. Lordships, if you are satisfied with these three issues, the council will just move on to the prayer.
You don't have to pray. No. We'll consider your prayer.
Lordships, could you please come again?
No, we'll consider your prayer. Don't have to pray again.
Much obliged, Lordships. I'll just summarize the three issues, Lordships, then.
Okay. Yeah.
Go ahead, summarize. Yeah, please.
Yeah, Lordship. So, with regards to issue number 6, we would like to humbly submit to this honorable court that it was not validly reinitiated because no new documents were provided. RMS, yes, we do accept it comes under the ambit of explanation 1, but since no new information was provided at that time, and since RMS could have been triggered in the 2018-19 year itself, it amounts to mere change of opinion, and thus it was not validly initiated. Going on to issue number 4, the Supreme Court themselves have clearly stated that it is only when the assessee has a doubt, and if the assessee is completely certain they don't have to pay the TDS, they don't have to use the mechanism of section 195 clause 2, and that in accordance with the FTC, since that double taxation has occurred because the set of brought forward losses treats that it is a tax attributable, we would like to humbly submit to this honorable court that we are entitled to receive the refund of 32 lakhs. Lordships, it was an honor arguing. Much obliged.
An honor for listening. Also, good luck to you. God bless you. Thank you.
Much obliged.
Thank you.
Permission to
If
approach the
judges
dais.
permit, if the judges permit, the respondent shall start the arguments.
Please go ahead.
Please.
May it please the honorable bench. Counsel seeks permission to collectively address this honorable bench as your honors.
Yes.
Much obliged, your honors. My team code is 14, and I appear before this honorable court on behalf of the respondent, the Deputy Commissioner of Income Tax. I shall be speaking for approximately 20 minutes, addressing the first 3 issues placed before this honorable court, while my co-counsels shall be speaking for 25 minutes, addressing the final 3 issues. At the very outset, your honors, the respondent humbly believes that the present appeal is wholly misconceived, and the order of the assessing officer, as affirmed by the Commissioner of Income Tax of Appeals and the Honorable Income Tax Appellate Tribunal, is legally sound and sustainable. Counsel assumes that the honorable bench is well acquainted with the facts of the case and seeks permission to proceed directly with her submissions. Much obliged, your honors. Your honors, Care Bio paid 18 crores to a direct competitor to keep them out of the market for 5 years, which is a deliberate restructuring of the competitive field. The first question before this honorable court is whether such a payment is a routine business expense or a capital investment. The counsel firmly submits that it is the latter. Your honors, the revenue submissions on this issue are threefold. Firstly, that the non-compete fee secured a structural advantage in the capital field. Secondly, that the enduring benefit test is satisfied in the commercial sense. Thirdly, that the absence of a tangible asset does not negate the capital character. Your honors, the first and foremost submission of the revenue is that the 18 crores paid under the BTCA was not part of any routine trading operation. Rather, it was a deliberate strategic measure designed to reorganize the competitive environment in which Care Bio operated. Here, the non-compete restricted a known competitor for a period of 5 years from operating in a specific field in country A and Southeast Asia, which was a deliberate restructuring, Your Honor. Advantage that was secured led to profit generation and market stability for Care Bio in this regard. Therefore, this operates at the level of profit operating apparatus itself and not at the level of day-to-day trading. Your
No,
Honors,
if you
what
could
we want to know is how do you classify this payment as what category for you to say it is capital in nature? What is the nomenclature you give for this 18 crores? Are you calling it as an asset? What is the status for you to say it is capital?
Indeed, Your Honor. Here, if you could kindly refer to paragraph 4 of the proposition, it says that there was a consolidation of region manufacturing capabilities, wherein the board specifically notes that the non-compete payment was critical to protecting the market share. Here, the consolidation is a capital heavy reorganization, Your Honor. And here we're claiming that there is an intangible asset which was present. Therefore, here, this reorganization led to the strengthening of the capital earning apparatus of Care Bio, which resulted in a structural capital advantage, Your Honor.
Are you saying, therefore, non-compete is an intangible asset? Is that your case?
No, Your Honor, that is indeed not, Your Honor. That is not what I'm submitting. I'm simply saying that the non-compete facilitated non-compete combined with the
consolidation that happened in this regard led to a structural capital change in the market, which in fact is the capital asset which we are referring to in this regard, Your Honor.
See, why don't you think?
Yeah.
Go ahead.
Go ahead.
No.
The point which you had pointed out that is critical to protecting market share according to the board notes, but there is nothing on the record to show, apart from retaining the market share, which is critical, there is nothing like ability to earn, let's say, even a higher profit for it to be even treated as something of a profit earning item. Because there is nothing, no information available on that. So do you have anything to say on that? Sir, please go ahead. You had something.
Go ahead. It's the right question. Please answer. Please answer.
Indeed, Your Honor. In this regard, I would like to submit that the non-compete apology, Your Honor, the non-compete clause led to a structural change in the capital structure of the market, Your Honor, which led to, in the present case, since Care Bio would now be able to make use of the freer market structure that was available to it. There were lesser competition in the market, wherein the products which were earlier available, it did not have to compete with those previous products, Your Honor. At this point, it could make use of this now available opportunity to convert this into the profit mechanism and thereby strengthen its profit earning apparatus in this regard, Your Honor.
See,
What we heard from the other side is that, we are not talking about is there a monopoly created? What you rightly also said is one competitor is not coming in the gemological field, but there are other people who are already present in the market. Therefore, you are still able to probably maintain your market share, but there is no other information available on whether that leads to some sort of a monopoly or a duopoly situation for you to even earn a higher profit and therefore to say it is more in the nature of a capital. So that's the point which I was trying to understand.
Your Honor, in this regard, the appellant did take the argument of the sharp business case. But here, I would like to point out that while the proposition is silent on the existence of other competitors in the market, we can safely infer from the facts that the non-compete led to the restriction of intuitive text function in the market, leading to alteration in the market composition that was present. Even a small change in the market or market competition will result in a strategic, especially given the consolidation that was happening, this would result in a strategic change in the market composition, Your Honor, which would thereby lead to the, in regards to answering your questions, Your Honor. Did that satisfy your question, Your Honor?
Yeah, go ahead. Yeah, I have no further questions. Sir, Venkatraman, if you want.
No. Carry on.
Much obliged, Your Honor. In this regard, I would like to begin with my second prong argument, Your Honor. In this regard, the appellant again placed heavy reliance on the submission that the enduring benefit test was not satisfied. The revenue respectfully disagrees in this regard. It is submitted that the capital expenditure arises when an enduring advantage is created. And in the present case, this test is clearly satisfied in the commercial sense. The revenue would like to place reliance on the judgment of Assam Bengal Cement Company versus CIT. Your Honor, if I could, if the council seeks permission to share the screen, Your Honor.
No, you can skip case laws. You come to the point. You look because
Indeed, Your Honor.
Both your pleadings are quite effective. Don't worry. We have read your pleadings.
Indeed, Your Honor. I would like to just place reliance on the Assam Bengal case for a small matter, Your Honor, in which it clearly says that it was no doubt spread over a period of 5 years, but the advantage which the appellant company got as a result of the payment was to ensure for its benefit for the whole of the period, Your Honor. In the present case as well, just as in Assam Bengal, the non-compete covenant prevented competition for 5 years. Accordingly, the expenditure made by Care Bio in acquiring this advantage was indeed of an enduring nature, thereby constitutes capital expenditure.
Was this considered in sharp business? As the Supreme Court said anything about this particular case, was this cited? This Assam case which you are talking, was it cited in sharp business and was it dealt with?
Your Honor, the sharp business did, in the sharp business, the non-compete fee was a standalone payment, Your Honor. But in this regard, just a request you to grant me a minute to recall my thoughts, Your Honor. Your Honor, I believe that the sharp business did cite Assam Bengal. the case of Assam, Bengal, wherein it held that if the payment was made to ward off competition in business or with an object of deriving an advantage by eliminating competition over a period of time, it shall be considered as capital payment, Your Honor. In the same regard, since there was an elimination of a competition in this case as well, the same shall apply, Your Honor.
Go ahead.
Go ahead.
Much obliged, Your Honor. Moving on with my third argument, there was a capital advantage that existed. Apologies, Your Honor. The revenue humbly submits that the capital advantage may exist even in the absence of a physical asset. In this regard, the Council draws the attention of this Honorable Court to Section 32, Clause 1, Subclause 2 of the Income Tax Act, which explicitly recognizes business or commercial rights of similar nature as intangible capital assets, Your Honor. This provision underscores that capital advantage may exist even without a physical form. The position is further supported by the judgment of Kafik Chemicals Private Limited, wherein it was held that the compensation attributable to a negative or restrictive covenant, as in the present case, a non-compete restriction, is and will be a capital receipt, Your Honor. Moving forward with the second issue at hand, CareBio paid 1.2 million to its parent entity for access to proprietary diagnostic methodologies, analytical protocols, and interpretative frameworks which were embedded within a database. The second question at hand before this Honorable Court is whether that payment is a mere service fee or a consideration for the use of intellectual property and scientific experience. The revenue humbly submits that it is indeed royalty, Your Honor. In support of these submissions, the revenue advances.
It allows to ask questions. Yeah.
Apologies.
No problem. See, the clear distinction between a mere use and acquiring a right to use, which will include exploitation. Here is a case, you have to connect the system to work. You are taking some technology and the technology, so somebody has to come and teach you how to do the technology and work it. So beyond that, what is the material you have got or placed to say that this is indeed an acquisition of a right in contradistinction to mere use? What is the material you have? What are the facts you have brought? Indeed,
Your Honor. In this regard, while the appellant pays reliance on the engineering analysis case for the submissions, there is here, at the present case, we have not talked, the payment is not for a copyrighted product, rather for a technical knowledge and industrial experience. Here, there was validation of the proprietary knowledge, protocols, and other services, Your Honor. If you could, when we read para 2 and 5 of the proposition in consonance, Your Honor, we can clearly conclude that Care Global had transferred proprietary testing methodologies, confidential, unanalytical databases, and advanced material analysis protocols, Your Honor. Therefore,
like this, you transfer a technology, but you say that when you transfer it, or you allow him to use the technology, but at the same time allow it to use with how to use applications. Okay, according to the facts, it only facilitates application. Now, this facilitation, will it become a transfer of a right? Is the question. Or is it a mere use?
Your Honor, in this regard, the revenue would like to humbly submit that the distinction between the right to use a copyright or the right to a copyrighted article does not arise here because we are dealing with technical knowledge and scientific experience, Your Honor. If you could kindly refer to para 19 of the proposition, the IT-80 order distinguishes the same, wherein it says that there was continuous validation of the lab outputs, which goes beyond the mere read-only database access, Your Honor. Therefore, there is a distinction that has been placed here. Much obliged, Your Honor. Continuing with my submissions, I would like to argue that in the case of Infosys, it was held that payments for access to online databases containing specialized information and analytical tools were indeed royalty because they enabled the recipient to apply the provider's intellectual property within its own commercial operations. In the present case as well, CareBio was enabled to apply Care Global's proprietary, unpublished, and and confidential knowledge and expertise into its own diagnostic services, bringing this squarely within the ambit of royalty. Furthermore, in Article 12, Clause 3 of the DTAA between India and Switzerland, it defines royalty to include the right to use information concerning industrial, commercial, or scientific experience. The revenue submits that the TSDA satisfies this requirement. Furthermore, the revenue relies in this regard upon the clause Vogel commentary, which explains that where a taxpayer receives access to a dynamic database containing proprietary and unpublished scientific or commercial knowledge, the payment is not for a mere product, but for access to the creator's accumulated know-how. Beginning with the third issue at hand, Your Honor, a specialist was employed by Care Global who was physically present in country A for 95 days cumulatively. They performed substantive technical functions that directly enabled CareBio to generate commercial diagnostic outputs. The third question at hand is whether that presence constituted a service P under Article 5, subclause 2L of the DTAA. The revenue humbly submits that it indeed did. Your Honors, the revenue submissions on this issue are threefold. Firstly, that the treaty threshold for service P is clearly satisfied. Secondly, that the specialist performed core income generating functions. Thirdly, that
they are dealing it slightly differently. They say it's 95 days, but you should exclude travel. You should exclude non-working days. You should exclude etc. etc. If you deduct all this, it comes to less than 90. So what is your answer for that? That's their case. They are not arguing anything beyond that. So what is your answer for that?
Much obliged, Your Honor. In this regard, I would like to point out that the clarifications that were provided, in which it was guaranteed that despite any of the circumstances, even if the entire 95 days period wasn't in a single period, it shall be determined and classified that they were for multiple visits that were present, but cumulatively, the 95-day period was indeed satisfied in this regard, Your Honor.
They agree it is multiple or cumulative, it's okay, 90 days. Computation of the threshold, they say you have to deduct certain days. So what is your response to that? So I'm not saying anything in the pleading, but if you got anything to say, you can say, free to say.
Your Honor, in this regard, I would like to place reliance on the article and the case of Morgan Stanley, in which the test of service P has been discussed, Your Honor, and wherein 4 main elements of the case has been provided. In this regard, if I could point it out, firstly, I would like to submit that even if the non-working days and all of the other deductions that are deemed by Your Honor are done, it won't be taken into consideration since the cumulative period that the specialist stayed in the service P shall be the one that will be considered. Your Honor, if I may continue with my submissions.
Yeah, just
Much obliged, Your Honor.
one issue on this PE. What have you to say about the point which is stated in para 8C of the proposition, which talks about the specialist had no authority to, negotiate or conclude contracts, etc. on behalf, because you are saying it is an income generating activity, but specifically it has been stated that they had no authority. The person who came, single person, had no authority to negotiate or conclude contracts, etc. What is the significance of that particular fact, 8C?
Indeed, Your Honor, much obliged. In this present facts and circumstances, even though we agree that the specialist did not have the authority to negotiate or conclude any contracts, this shall only be applicable when we are talking about an agent P, Your Honor. In this present case, we are talking about a service P at hand, and therefore that shall not be taken into consideration.
Okay.
If I may move forward with my submissions, Your Honor.
Go ahead.
Much obliged.
As long as services are performed within the territory, okay, then it becomes, does it not become a service fee? What other tests you have to apply? If somebody is there physically for 90 days, does he not satisfy the threshold of service fee?
Indeed, Your Honor, that is exactly what we are applying here. We are saying that for the test of service fee, there are 4 main elements. Firstly, that the services be furnished in the source state. Here, the specialist was deputed in country A. Secondly, that the services be provided through employees or personnel of the enterprise. Here, the specialist was a personnel of Care Global. Thirdly, that the duration threshold should be fulfilled within a 12-month period. Here, the 95 days threshold was indeed passed. Finally, that the act should not be preparatory or auxiliary in nature, Your Honor. Here, I am arguing that the specialist performed core income generating functions, Your Honor. Hence, if these four elements are satisfied, then service fee shall exist. If I may continue, Your Honor. Much obliged.
Go ahead.
Here, the specialist performed core income generating functions because it enabled CareBio to implement analytical technology and generate commercial diagnostic outputs. Without the services that were provided by the specialist, Your Honor, the mere transfer of the confidential or unpublished technical knowledge could not have been assimilated by CareBio in its workings. Hence, the specialist support further the capital earning apparatus of CareBio in this regard, thereby leading to maximization of its profits, directly linking to the core income generation, Your Honor. Finally, it is well established that under Article 7 of both the OECD Model Convention and the DTAA, that where a PE exists, profits attributable to that PE are taxable in the source state, in the present case, country A. Accordingly, the Council humbly submits that the Honorable Court holds that Care Global constituted a service PE in country A during the relevant period. If Your Honors are satisfied, the Council would like to invite the Co-Counsel to proceed with his submissions, Your Honor.
Good luck.
Much
Yeah, go
obliged,
ahead.
Your Honor.
Go ahead.
It was an honor to argue before this court.
May it please this court, am I both audible and visible, Your Honor?
Yes.
Yes, please.
Your Honor, with your permission, may I begin with arguments for issue 4? Your Honor, issue 4 concerns whether CareBio was under an obligation to deduct tax at source under Section 195 of the Income Tax Act made to the Care Global Enterprise under the THDA agreement. Your Honor, in this regard, there are three principal contentions of the revenue. Firstly, I will address the fact that the legal standard placed reliance by the assessee in this particular case as per the GE India Technology Center is valid. Secondly, I will explain that the THDA payment contained income that was chargeable to tax in country A. As well as thirdly, I will show that the statutory consequence that automatically follows in this regard is a disallowance under Section 40A(1). Your Honor, in regard to my first limb of the argument, the governing principle as settled by GE India is that Section 195 obligation only arises in case there is some income that is chargeable in this particular regard. The revenue very respectfully accepts this principle. Section 195 does not require tax to be deducted merely because a payment is made to a non-resident. Only and only if there is some chargeability, therefore Section 195 will apply. This is why we lead to the next question, which is the THDA payment that contained this income, was it chargeable in country A? In this regard, Your Honor, as submitted by my co-counsel in issue 2 and issue 3, if we were to constitute that there was royalty in this particular regard, this satisfies this test of chargeability of income, Your Honor. Secondly,
I have a question. See,
yes, Your Honor.
Concede chargeability is the starting point. That's the concession you are now giving, or at least that's the acceptance you have. Then, in the absence of any decision or a provision directly saying this transaction is chargeable to tax, it becomes a debatable issue. So you will have your views, they will have their views. In such a scenario, should TDS be deducted or not? What's your answer?
Much obliged, Your Honor. Your Honor, let's look at the first principle in this regard to understand why this withholding obligation was a parliamentary intent. The sole purpose of a TDS is to ensure that there is some remittances that are deducted at the particular time of payment, and therefore, if there is certain decision on that particular payment, a refund is allowable. What the principal contention of the revenue is that assessment of chargeability is an objective assessment, Your Honor. It cannot be led to the subjectivity of the taxpayer that they subjectively decide whether the payment is chargeable or not. The recourse for this, Your Honor, lies in Section 195(2). The Transmission Corp judgment has also dealt with this particular issue where they said, in case there is any doubt or there is any dissatisfaction as to how much quantum of TDS needs to be paid, 195(2) opinion is available to the assessee, Your Honor.
195(2) is only for rate applicability. not taxability. Taxability is under 191. So, who determines taxability? Are you saying every time everybody should come first to you for a cross-border payment under 191, take a clearance from you? Or can they make up their mind, for these reasons, I need not have to go to an officer? What is your answer for that?
The answer for this is very simple, Your Honor. The answer lies in the fact of chargeability itself. There are certain incomes that are debatable in terms of chargeability, whether they're constituted a royalty or not, whether there was a service fee or not. In this particular case, TDS needs to be deducted under 195. In case there is certainment that this tax or this remittance is not chargeable by the virtue of law, where there is no question of doubt that arises, in those cases, it is permitted to not deduct TDS and not follow the withholding obligation under 195, Your Honor. That is the principal contention on behalf of the revenue.
Oh.
Much obliged, Your Honor. The second limb of the same argument, Your Honor, as the Honorable Bench has led us to, is in regards to the 195 obligation. In case there was a service fee that was constituted or royalty that was constituted, Section 40A1 deduction will consequently be disallowed, Your Honor. The reason for this is that this is not a penal provision. This is merely regularizing a wrong that was committed on behalf of the assessee at the time of withholding of taxation, or TDS, at the time of withholding obligation under 195. Therefore, it is a statutory computation mechanism that has been designed for this particular regard, that if withholding obligation has not been met, even in the future date, if the chargeability has been assessed and ruled upon, the 40A1 disallowance shall consequently be followed, Your Honor.
They don't also disagree with you. If it is liable to TDS, then not withholding leads to 40A. Therefore, can't we not put a question here again? It is such a onerous task that you're going to disallow entire 40A benefit for them. In such circumstances, do you have to say it is so onerous, therefore you should come to me? Or because it is so onerous, the benefit of doubt that something is debatable, and see, it's a question of law. Something is debatable, therefore they need not have withheld it. It's okay. So non-withholding is not is not a breach, and therefore consequentially 40A will not apply. How do you take a stand? Will you take this stand or take that stand? What is your case?
The revenue would rely on the first principle, Your Honor. As the taxing authority, we will not let any income being escaped from taxation. Your Honor, in that particular regard, the TDS or the parliamentary intent for TDS was to satisfy this particular problem. Therefore, in case there is any income that is either escaped or not been taxed upon in the correct manner, the Section 40A1 should consequently logically follow, Your Honor. That is the contention on behalf of the revenue.
Good.
If Your Honor is satisfied with issue 4, may the council proceed with issue 5?
Go ahead.
Much obliged, Your Honor. Your Honor, in regards to issue 5, this FTC issue concerns whether the appellant was entitled to claim this foreign tax credit under Section 90 of the Income Tax Act, read with Rule 128 and Article 25 of the DTA, which is parametry to the India-US DTA. The revenue has 3 principal contentions in this regard. Firstly, the treaty credit mechanism itself caps the credit at the Indian tax attributable to the foreign income, as was also argued by the appellant. Secondly, on the present fact, this cap yields nil. Secondly, on Rule 128.5, this merely operationalizes this principle, Your Honor. There is no conflict between the domestic law and the international law in this regard. Thirdly, Your Honor, there is judicial authority that has ruled in both favor of the assessee as well as the revenue. In regards to the assessee, the cases are distinguishable on facts. In regards to the revenue, there is certain similarity in terms of the facts, but the final decision from the Supreme Court is still under an SLP, Your Honor. Therefore, we are not bound by any particular jurisdiction at this point of time.
So we will not go to any case laws. See, the point is this. Suppose the same income has occurred in India instead of an overseas territory. So that's what they are trying to say, even though they didn't put it in those words. See, income happens in country A, and therefore it becomes taxable. Suppose income happens in India, in this country, and you have a carry forward loss. which subsumes this income, then your carry forward loss will mitigate any tax exposure. No tax will be paid. Here is the situation. One portion of the income happens outside the country and that country has taxed it. Now you come back and your income is now being subsumed by a loss. Had it happened in India, you would not have paid tax at all. So now that tax has been paid, they say, give us the credit by way of a refund. So what is your case? Credit means only adjustability, or credit in its intrinsic sense, in terms of the spirit of the law, should be by way of a refund.
Much obliged for that succinct explanation, Your Honor. This is the exact bone of contention that the revenue is trying to solve. To understand this, the revenue will submit three principal contentions for this particular line of reasoning. The revenue understands the case of the appellant that the income that was outside has been taxed and the domestic benefit has been taken under the Income Tax Act for the set off of the brought forward losses which have been set off. Now, let's understand through Article 25. If we look at the title of Article 25, it says elimination of double taxation. Your Honor, the first argument in this behalf is that double taxation will only arise in case there is taxability there is the payment of taxability on the same income twice. Your Honor, in this particular scenario, the income was only taxed once. Even if this was, say, taxable in this particular country, the net taxation liability on behalf of the assessee was nil. Therefore, the first principal understanding here would be that the state exchequer cannot be mandated to pay a refund out of their own pockets in case they haven't received any money from the assessee. This would lead to an absurd outcome, and this was the exact line of reasoning that was also taken by the Revenue in the Bank of India case. They simply said,
why absurd? See, if the same income happens in India, you would not, could you have taxed it? You could not have taxed it at all. Because it happens elsewhere, you have taxed it. That country has taxed it. Now, when an income which has happened elsewhere, are you saying, having happened elsewhere, we can only give you credit if it is payable here? We cannot give credit or a refund if it is otherwise subsumed by way of loss. Is that your policy stand?
The policy stand remains this. The legal stand would then follow that at the time of negotiation of Article 25, this outcome one could not have been envisioned. This is why this led to an absurd outcome, as was also noted in the Bank of India case. But if Your Honor will allow me to continue my submission, I will explain the exact point that the revenue is trying to get at. The point is very simple, Your Honor. The point is such that in case Article 25 was to be read, it very simply says, and Your Honor, if you would allow me to read it out. Income tax paid in the United States, whether directly or by way of deduction, such deduction shall, however, not exceed that part of income tax which is attributable to the income which is taxed in the United States. Further, Rule 128.5, if we were to read, that also leads us to the same conclusion. It provides that the lower of the foreign tax paid and the Indian tax payable on such income shall be credited. Therefore, in this case, if the tax payable or the net tax liability is nil, the higher of nil is going to be nil. And therefore, there can be no refund that has been envisioned in this case. In all authorities that has discussed this case and ruled in favor of the assessee, the situation there has been relating to the Section 10A exemption, where they simply say that because there is still certain positive tax liability on behalf of the assessee, the credit system still worked. In an ordinary tax credit system, like the Indo-US DTA has envisioned, a refund out of the state exchequer is going to be antithetical to what the revenue would ever want to parliamentary impose upon the country. That is the principal contention on behalf of the revenue at this point of time, Your Honor.
It is just a supplement. Is it your case, therefore, in this particular case, there was a brought of a loss which was set off and therefore everything was negative. But let's say you must have an income, even without set off, etc. There must be an income. and that income must be more than the foreign income, then and only then the set-off can be given to the DTC. Is that the question? Because there could be no, there could be a partial profit loss set-off, and still there could be a profit, which amount could be less than the profit which was offered as income in the foreign country. Then also you will say the credit will be restricted to this lower amount on which tax is payable. Is that what you are advocating?
Your Honor, this was dealt in the Wipro case, and somewhat this leads to that conclusion. But Your Honor, I have one very small additional submission to this regard. I will ensure brevity in this regard, Your Honor. If we were to look at the OECD commentary and paragraph 57 of Article 23 Model Tax Convention Commentary 2011, it very clearly provides that this ordinary tax system works in this particular way. The state of residence R allows as a deduction from its own tax on the income or capital of its resident an amount equal to be paid in the other state. In this regard, Your Honor, the maximum credit that can be computed where these general DTCs set forth a maximum credit that must be granted. If no tax is due in the resident state in the same tax period, the tax paid in the source state is not credited, Your Honor. This was also noted by Professor Michael Lang in his book, The International Introduction to the Law of Double Taxation Conventions. We are not placing reliance on this academic submission, Your Honor. We are merely assisting the court in understanding the fact that the outcome, the judicial outcome of paying this refund will be antithetical to the parliamentary legislative intent of taxation, Your Honor. That is the submission on behalf of the respondent in this regard.
So your point is, if it is income in India but subsumed, then that collapses because of the effects of law.
Yes, Your Honor.
If an income elsewhere, you are entitled only to credit, not a positive refund. That doesn't flow from the plain language of the law. That's your case.
Much obliged, Your Honor. That is our case.
Even though Wipro was argued by me for the assessee then, and we succeeded, which is
Yes,
pending.
Much obliged, Your Honor.
Go ahead.
Your Honor, in regards to issue 6, procedural question, Your Honor. This was validly commenced under the post-2021 framework. The first point that would assist the court in this regard was that the reason to believe standard was replaced by the information that suggests standard. As rightly pointed out by the Honorable Court.
State question. See, there is a 143.3 assessment in the hands of the Indian entity and which you have not found fault with. Now, how can you now come back and say here? So, what is your case? But that looks to be the main pleading. 143.3 is over there. They have not found anything. Now, why do you come and search and come back to me and say? So, what is your case for that?
The case is three-pronged, Your Honor. The first is the RMS alert. The second is the ordered objection, which both qualify as an information that allows me to open the case again. The information test does not require me to have any new additional information. It merely requires me to have information as recognized by section 148, explanation 1 and explanation 2, which leads me to believe that there is some income that has been escaped. Again, principally, the revenue would never want any income to be escaping. In this regard, we are under the limitation period, Your Honor, and therefore, even though there was some...
We need a clarity. See, the assessee was saying, the girl was saying, everything is known to the department and nothing new has been flagged. So, is it a case that the NRI had in fact filed a return, filed all documents and did not withhold tax? Or is she referring to the 143.3 assessment of the domestic entity in which disclosures were made? I want to ask that question from you. Do you have any idea of that?
I believe...
Where is this disclosure happened? In which assessment?
I believe the learned friend is referring to the 143.3 assessment only, Your Honor. But in this particular regard, the point of the matter is that the change of opinion cannot be constituted because the AO was silent on most issues. And Your Honor, there are multiple authorities in this regard that... Yes, Your Honor.
No. AO being silent will not help you, but this can help you. 143.3 is before, but the domestic entity is before a different AO. So the TDS officer is independent of the AO. So if TDS officer does not have any of these documents, you can't say that it was there and therefore you can't flag cannot be a right defense.
much
So,
obliged.
no, but we also ask them for 1 minute in case they are there. Their disclosure is where? Under 143.3 or here? What is your case? Your case is only in 143.
Our particular case is 143.3, Your Honor. In addition to that, if Your Honor would allow me to submit my other arguments in this regard, consider that even if the 143.3 case were to fall, we still would like to submit this mere fact that if in case that assessing officer was silent on certain opinions, it cannot qualify as a judicial opinion or a judicial application of mind. Therefore, in case there is a reassessment that is happening, it cannot constitute as a change of opinion, Your Honor. There is
143.3 as AO, if he's silent, he can't reopen it on suppression later.
Yes, Your Honor.
Whether that will be his silence, can it be against a TDS officer who is independent, who does not have material, is something you can argue.
Yes, Your Honor. This is exactly the argument that in case 143.3 argument was to fall, the second contention on the behalf that we would additional submission in regards to the revenue is this, that if there was silence on that particular order, it cannot constitute as a change of opinion. Moving further to the third limb of the argument, Your Honor, the section 151 affirmity that was recorded by the assessee in the particular submissions. Your Honor, we understand that there may be a case of the infirmity that the clarifications would like to suggest to. But Your Honor, the disclosure in the facts have clearly stated that there have been documents that have been provided to the particular assessee in regards to the prima facie opinion being formed, which is more than sufficient as to what the assessee under natural rights needs to respond to. Therefore, the 151 sanctioning authority has recorded their statement. It has not been provided. And Your Honor, the revenue also has placed reliance on this authority in this particular regard, that if the assessee asks for the sanctioning authority's order, that needs to be provided, Your Honor. It need not be automatically be provided to the assessee. So therefore, the word provided is the major contention as the final argument, Your Honor. If Your Honors are pleased with the yes, Your Honor.
Look at the para 12 of the proposition where there is a specific fact which has been saying the return was selected for scrutiny, and then the assessment on 143 accepted the returned income. They also have given explanations regarding non-compete, TSDA, withholding tax, FTC claim. Everything has been furnished to that particular officer. And after examining, taking into account all of them under 143.3 only, he had accepted it. So including the TDS, including the TSDA, including everything, he has submitted. The information has been submitted. Therefore, how suddenly, because of an explanation, some information has come because of the risk management system or an audit, etc., can that simply override all this information having been made available? And also, it's not even 143.1, it's 143.3. Therefore, there is a scrutiny which has taken place, and then only everything has been accepted. So in such a situation, if just because of the RMS is allowed to, pick up something and therefore everything can be re-examined, is it amounting to some sort of a review more than a reassessment, etc., of the same order?
Your Honor, if you would allow me to share the screen in this particular regard, there is one authority that talks about a similar issue, though not directly in regards to the RMS, but it talks about the silence in the reassessment proceedings, Your Honor. If you could kindly point to the case of ITOV TechSpan, Your Honor.
Sir, tell us, you don't have to go through, you can quickly tell us what it is, that's all.
Your Honor, ITOV TechSpan clearly holds that in case there was silence in the starting of the adjudicating authority, there can be no application of mind. Therefore, this will not amount to a review, it will amount to a reassessment, considering that the first principle or at the first instance, the issues were not assessed in their entirety. Additionally,
it may not help you. Courts are all against you to say that is dereliction by the officer if he doesn't look at it. His silence cannot be used to implicate somebody. But the one difference here is the disclosure by the domestic entity for an assessment under 143.3. Can that be a shield in the hands of the TDS officer who is independent in withholding and who doesn't have any of this information? And the risk management goes to the 143.3 domestic entity, picks it up and tells the TDS officer, look here, these are all startling material for you to examine. In such a scenario, can you do a Can you do 148 for the NRA entity? Is the question. So what is your answer for that?
The principal contention on behalf of the revenue in this regard would be that yes, there will be a reassessment that is going to be opening in this particular regard. The simple reason for that is that there is certain income that has escaped, Your Honor. In case the honorable bench were to hold that this reassessment is going to be invalid, the escaped income, the judicial outcome of such would be absolutely antithetical to the fact that this income is not be going under taxation. Therefore, it would be leading to non-taxation, Your Honor, and that judicial outcome will be antithetical to why these reassessment proceedings exist in the first place. In support to this argument, Your Honor, in regards to the RMS, the CBDT notification that talked about this particular RMS system, Your Honor, had said that this works in a technological way where there is certain artificial intelligence that is being used. At this particular point, Your Honor, the artificial intelligence works as a black box where we do not understand what exactly it is flagging in terms of new information, and therefore the standard was any information. In this particular regard, if an RMS flag has been generated, further audit objection has been found, Your Honor, that means it is under 148 explanation reasonable enough for us to go ahead and open the reassessment because certain income has been escaped, Your Honor. That is the final submission in regard to this issue, Your Honor. It was an absolute honor arguing before this honorable bench, and we pray that the appeal is not allowed and the orders of the below offices are upheld.
It's an honor for releasing all the four of you, for all the three of us.
Absolutely.
Much obliged, Your Honor.
We'll take one question each. Does the court clerk or court of master, do we have time?
Your Lordship, if Your Lordship's permit, shall we proceed with the rebuttals, Your Lordship?
Oh, rebuttal round. Okay. I thought we'll use the rebuttal round to switch sides and let us ask question. Let them argue one for revenue and we'll ask question. That's more easy and more, that will test better standards, if you permit us.
Can I please confirm with my coordinators, Your Lordship?
We have done it in the past, but you just check. We have one question for the first side and one question for the second side.
Just a minute, Your Lordship.
Yes. Ask them to do the rebuttal. Ask them to do the rebuttal.
Your Lordships, we are confirming with our coordinators, if you wish, Your Lordships. Shall we proceed with the rebuttals or can I verify with them if you can
Go
do
ahead
that?
with the rebuttal. Let's not spend time. Yeah, let's go ahead.
Much obliged, Your Lordship.
The council seeks permission to approach the virtual dais to perform the rebuttals. Obliged, my lords. My lords, I have a total of 5 questions to address for my learned friends from the Revenue Council. My lords, the first one is that, with respect to the first issue, my lords, my learned friend was relying on the fact that since one competitor was warded off from the market for 5 years, it could possibly...
We'll ask you a couple of questions and you can rebut that more than going with the sequence. See, what we want to know, whether if it is a 143.3 assessments in the domestic entity, and you have not filed any returns with any papers or documents or support, why should not the TDS officer, using its power to do an assessment for the first time, because you have not paid under 148? What is wrong in invoking the jurisdiction? What is your answer for that?
my lord, since this issue falls on my co-speaker's domain, I would request her to answer the same, with your lordship's permission.
Oh,
Go ahead. Go ahead.
Your Lordships, could you please repeat the question once more?
no, I mean, we have repeated it several times. You were banking. I thought you have made out your case on jurisdiction, saying the whole notice has to fall flat. Whereas 143.3 has happened only with the Indian entity. There's no assessment with your client. So your client has not paid taxes, not withheld taxes, not filed TDS application. So assessment has to happen for the first time. So the risk management system picks up those documents from the 143.3 from the domestic entity, flags it to the TDS officer and say, look here, there appears to be some case which you have not noticed it. So in such a case, how is this a jurisdictional deficiency or an error in invoking 140?
Much obliged, Your Lordships. So, Your Lordships, we need to understand here that when this order took place in 2018-2019 itself, scrutiny was completely taken over by it was scrutinized. This order was completely scrutinized by the Revenue Department. And then what we are stating is that the revenue, yes, they did not apply their mind that they are stating. But given the fact that it was with those same information, the RMS is again stating, and under section 148A clause D also, they
You're putting an extra burden. What I understand your point. What you're saying is when the AO does 143.3, he should have found this and he should have gone to the TDS officer and said that no, you invoke an assessment proceedings against them. Why should he do that? Where's the need? Where's the obligation? That's the question.
Exactly, Your Lordships. So,
No problem. No problem. Yeah, go ahead with your with the rebuttal. Yeah.
much obliged, Your Lordship, yes.
Thank you.
My lords, with respect to the first issue, my lords, my learned friend was relying on the fact that since one competitor was warded off from the market, since one competitor was warded off from the market for a 5-year period non-compete agreement, it could possibly alter the profit apparatus of the company. Because this kind of a statement is completely in contravention with the Honorable Supreme Court decision in the sharp business system, where the Supreme Court has very specifically noted that even non-compete agreements which are extending for around 7-year period cannot be considered to affect the profit apparatus of the company. So it is in complete contravention with what the Supreme Court has noted. And also, my lords, with respect to the second issue, my learned friend also placed her reliance that the transfer of the analytical database falls under the category of commercial or scientific experience and not under the category of copyright. Lords, this statement is completely in contravention with what their assessing officer itself has held. Lords, please do refer to para number 15 of the Moot proposition. It very specifically states that the AO, the assessing officer, concluded that the control access to CARE Global's proprietary and analytical database constituted the use or right to use intellectual property. So he himself refers to the copyright category. And right now, my lords, their counsel comes in and flips the entire case, which is completely unacceptable and in certain ways. Indeed. And also, my lords, with respect to the third issue, it is also with respect to the third issue, my lords, how can it be said that the technical expert imparted core function by just providing mere technical assistance without making any active participation in the business? Especially, my lords, the activities of such a nature are specifically protected under the parameters of stewardship activity. We just wanted them to prove what kind of core activity did he exactly make or did he exactly do. We just wanted an answer to that particular respect, my lords. And also with respect to the fourth issue, we also request the respondents to state how exactly the obligation becomes on part of us to deduct tax at source, since we have already ascertained the GE stance which has been provided by the Supreme Court. And also, my lords, with respect to the...
This is something intriguing. So self-certification. So GE only says chargeability. So you will assume chargeability every time. So then nobody needs, then we can scrap TDS department itself wing. Everybody will assume that it is not chargeable to tax. There must be a basis for your assumption. On what strength did you believe it is not chargeable? That is not coming out from your end also.
Indeed, my lords, the belief which on our part was that this amount did not constitute royalty. That was the strongest argument which I also placed it on record. So therefore, my lords, there wasn't...
Belief in law is not your self-belief or astrologer's belief. Belief in law is based on a foundation, based on a material, empirical source. That's not forthcoming in your case because of
Indeed,
this.
my lords. Milos, even the empirical evidences, I would refer to the relevant laws and relevant DTAA provisions. Even all of them completely favor my case. So that is what my entire submission is all about. And more importantly, Milos, even in this respective, I didn't get any kind of notices, or I didn't get any kind of information from the revenue department in order to just at least instill a speck of, no, Milos, there should at least be a reason to believe that this would fall under the category of TDS or not.
Under the new law, information is enough. There is no need to reason to believe.
Indeed, but at least there needs to be a head start in order for me to think of applying to them in order to ascertain whether it falls under this or not. So, which is my case, it is not at all there. Obliged, Malos. We have 4 questions, Malos. We would like to address it to them. Obliged.
Very
Your Honor, I would like to begin with the first 3 rebuttals provided, and my co-counsel will rebut for the 4th point at hand, Your Honor. Much obliged, Your Honor. In regards to the first point of question, I would like to place reliance on the fact that in the Sharp business case, it was clearly held that if an advantage is put an end, if there's an advantage and it can be put to an end at any time, then it will be considered to be a revenue expenditure, which is not present in the current case, Your Honor, since the advantage that accrued through the non-compete could not be put to an end at any point in time. And hence, there's a differentiation that arises between the Sharp case and the present case at hand, Your Honor. In regards to the second issue at hand, Your Honor, the appellant, the opposing counsel,
they are very clearly pleaded. It is in the nature of stewardship. Can you hear me?
Now I can, Your Honor.
So they have very clearly pleaded this is in the nature of stewardships. In the sense, it's intra-group. When you give something, you also support what you are given to do. So when it is in the nature of intra-group services, how does this become a royalty, and how do you address that issue?
Your Honor, in this regard, I would like to humbly submit that there was a transfer of information that was there. There was a transfer of the scientific experience that was accumulated by Care Global in this regard, Your Honor. Here,
they're all just data accumulated. What is the scientific experience he gets? What is the scientific experience you're talking about?
Your Honor, in this regard, Para 2 of the proposition clearly says that there was confidential database that was transferred by Care Global.
Every confidential data needed to use scientific experience, right?
Indeed not, Your Honor, but the scientific experience has also been provided in the proposition, Your Honor.
Right.
Wherein there was a transfer of the same. Hence, since the specialists combining both the second and third question of the appellant, I would like to mention that commercial and the scientific experience does come under royalty argument of the intellectual property, Your Honor. Furthermore, the specialist did perform core income generating functions because without the imparting of the skills that were provided to Care Bio in this regard, the Care Bio could not have performed the substantial maximization of the profits in this regard, Your Honor. Therefore, it won't be mainly classified as stewardship, but rather core income generating activity in this regard. Much obliged, Your Honor.
May it please the court, Your Honor, in regards to issue 4 and issue 6, if I may give a sir rebuttal. Your Honor, if Your Honors would refer to the proposition in paragraph 13, the 148A-B notice dated 15th June 2023 has sufficient reasons recorded, including a prima facie belief that the non-compete payment yielded an enduring benefit, etc., Your Honor. That was enough for the appellant to ascertain what are the issues that are being contested against them, and therefore give them a chance in the show cause to reply accordingly. Therefore, the procedure was followed, Your Honor. In regards to the TDS, Your Honor, if the revenue may humbly try to understand the ratio of GE India, the humble submission in this regard would be the objective chargeability, Your Honor. As Your Honor rightly pointed out, in case, Your Honor, suppose an Indian resident is paying a foreign company for purchase of goods, which is a simple import transaction. There is no service, no royalty, no PE. The payment is purely for tangible goods. Therefore, chargeability is not even arguable, Your Honor. In that particular case, the withholding obligation under 195 is not going to arise. In
Now
case there is, yes, Your Honor.
we'll put a reverse question to you and also to the other side. Suppose you are defending for the assessee. Now, how will you defend this position?
Your Honor, in this particular scenario,
For the assessee, not for the revenue. For the assessee.
yes,
How will
Your
you-
Honor.
Yeah.
If you could give me 10 seconds to collect my thoughts, just
Yeah,
10
yeah.
seconds.
Take your 10 seconds. And
Your
for
Honor,
you, for the other team, how do you say this is to be defended, that this is nothing but a capital asset? That one question. For the
Your
revenue.
Lordship, may I start now?
Yeah, you start, then let him answer it. Yeah. How do
Okay,
you?
so I'll go forward. So, as the revenue, I would ask or I would state that Caribou has an obligation to use the Section 195 clause 2 mechanism by stating that in the GE India case, they have actually delineated the facts of transmission commission and that of the GE India case. So, in GE India case, it was a payment of a single nature where it was import of a software. Whereas in a transmission case, it was the supply of machinery, the construction of that machinery, which would amount to believe that that would indeed be chargeable under the India. So GE actually upheld the statement, and what they said is that if there was even a mere doubt of them, and in this case, since Cadbio has every single doubt that yes, they did, since their characteristics would indeed amount to royalty, they would have had to use Section 195 Clause 2. So as a revenue, I would have stated this.
Okay. What do you now say for the
Yes.
assessee? Maya?
my
Yeah,
principle.
And also for the, may I, Your Lordship, since you asked that how would I have defended for the capital as a thing, firstly, I would have defended it based on two grounds. The first ground being that there is actually a loophole provided in the proposition itself. Because, my lords, the non-compete fee of 18 crore rupees has been claimed by the assessee only. So there is nothing on record to prove that I exactly paid 18 crore rupees, because in para number 4, it's mentioned that the BTC agreement did not specifically provide for any consideration for the restrictive covenant, that is for this non-compete fee. So I would have said that since there is nothing on ground to prove that you exactly paid 18 crore rupees, how am I even supposed to allow you with a revenue?
This is an income tax case and not a PMLA. So no problem.
Yes,
What's
that
your
would have
answer?
been.
Speaker 2, 14.
Your Honor, my simple reliance would be on the fact that there was no royalty, there was no service fee. In now opening the assessment and coming to me and telling me that there was a royalty and service fee, the withholding obligation cannot sustain, Your Honor. The subjective element is still under debate. I concede to that particular point, Your Honor. But in this particular regard, if I were to place reliance on Engineering India and say that there was no royalty in this particular case, which is an objective fact, then that is one of the only grounds I would be able to take in this particular factual scenario, Your Honor.
Did you have any opportunity to argue for the assessee in earlier rounds?
No, Your Honor, not yet.
And still, you've been only for the revenue. I could find that. All right. Thank you. Thank you so much.
Much
Sir,
obliged, Your Honor.
Arvind, can we close?
I'm fine. I don't have any further questions.
Arvind?
Absolutely fine.
It was a delight to
Yeah,
a
great.
delight to hear all the four. God bless you all. Wonderful, wonderful.
Thank you. Thank you all. Excellent.
Thank you.
Very-
Thank you.
Thank you so much, sir. Thank you, sir.
Since the judges are satisfied, we would like to move the participants to the waiting room so that we can proceed with the scoring. Thank you.
You can move those two names also outside, huh? Which are my name and Vishnu.
Hey, you should be there. Why are you removed?
We are live, sir. Can we begin, sir?
Yeah.
A very good evening to one and all present here. We have gathered for the valediction ceremony of the 21st edition of India's most prestigious moot court competition and also to celebrate the legacy of one of India's most brightest legal luminaries, Sri Nani Palkhivala. We will begin with the invocation song.
श्रीं भजत अखिलहृजेत्री मैत्री भजत अखिलहृजेत्री मैत्री भजत अखिलहृजेत्री आत्मवदेव परानपि पश्यत आत्मवदेव परानपि पश्यत युद्धं त्यजत स्पर्धां त्यजत युद्धं त्यजत स्पर्धां त्यजत त्यजत परेष्वक्रममाक्रमणम् त्यजत परेष्वक्रममाक्रमणम् मैत्रीं भजत अखिलहृजेत्री मैत्रीं भजत अखिलहृजेत्री जननी पृथिवी कामदुघाते जननी पृथिवी कामदुघाते जनको देवः सकल दयालुः जनको देवः सकल दयालुः दाम्यत दत्त दयध्वं जनता दाम्यत दत्त दयध्वं जनता श्रेयो भूयात् सकल जनानां श्रेयो भूयात् सकल जनानां श्रेयो भूयात् सकल जनानां श्रेयो भूयात् सकल जनानां श्रेयो भूयात् सकल
The 21st Nani Palkhivala Memorial Virtual Tax Moot Court Competition 2026 has been a grand success, thanks to the unwavering support of our esteemed institution, Shastra University. Established in 1984 as Shanmuga College of Engineering and conferred university status in 2001, Shastra is ranked among India's top universities by NIRF and global agencies like Times Higher Education. Accredited by NAC with an A++ grade, it is also recognized as a Category 1 university under the UGC's Graded Autonomy Regulations 2018. The Moot Society at School of Law, Shastra, is dedicated to shaping competent legal professionals and strengthening the university's presence in the national mooting circuit. By hosting the 21st edition of this prestigious competition, we continue our commitment to holistic legal education and practical learning. Now, I invite Kumari Sagarika Nair, third year BBA LLB Honors, the co-convener of this edition of Nani Palkhivala Virtual Tax Moot Court Competition, to deliver the welcome address.
Success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you're doing or learning to do. A very good evening to one and all present here. It is my immense privilege to welcome all the dignitaries and members present today on behalf of the Moot Court Society of Shastra Deemed University. It is our honor and pride to have hosted the previous editions of the Moot and to be hosting the 21st edition of the Nani Palkhivala Memorial Virtual Moot Court Competition and honor Nani Palkhiwala's spirit. Firstly, I extend extend my warm welcome to the honorable jury of the final round of the 21st Nani Palkhivala Memorial National Moot Court Competition, Shri N. Venkatraman, Additional Solicitor General for India, Shri P.H. Arvind Pandian, Senior Advocate and Additional Advocate General of Tamil Nadu, and Shri R. Parthasarthi, Advocate on Record at the Supreme Court and Patent Agent. The 21st edition of the Nani Palkhivala is supported by the C. Natarajan Chair of Legal Studies under the aegis of Shri N. Venkatraman, the Additional Solicitor General of India, who has always been a guiding light in conducting the previous editions of the Moot as well. I also extend my heartfelt greetings to all the participants who have shown great enthusiasm and brilliance, ensuring intense competition. Hearty welcome to all the faculty members present here, and a warm welcome to all the print and electronic media who have been a quintessential part of this competition. I take pleasure in welcoming all the members of the organizing committee whose enthusiasm and tireless efforts have culminated into today's spectacle. A hearty welcome to the online audience for being a part of today's event. I welcome you all once again to the valedictory ceremony of the 21st Nani Palkhivala Memorial Virtual Moot Court Competition. Thank you.
Thank you, Sagarika. Now I invite our beloved School of Law Dean, Dr. Kalicharan ML, to share a few words with us.
Good evening to one and all present here. Respected Shri Venkatraman sir, Shri Arvind Panditan sir, Shri Parthasarthi sir. It was a real fabulous thing that I never mooted in my school life, but when I was listening to the students, that the comments that you are giving, I was thinking like I should not have been a student. I missed something in my life. Thank you for guiding the students. It's a competition, but still it remained as a learning process for me when I was seeing that particular thing. I was really happy that you graced this occasion. On behalf of the Shastra Law School, Shastra University, primarily I thank you all for giving that enlightenment to these children of future generation of lawyers. On behalf of Shastra School of Law and Shastra University, I owe in-depth things. This is the 21st National Moot Court Competition of Nani Palkhivala, and we are conducting only on tax laws, as it is a pride moment for every student, faculties, and coordinators who have put their efforts from last 1 month, especially our law school children who have put their effort to that extent to make it a successful. And today we reap the benefit by, in the closing ceremony of this, their efforts have been shown properly without any smallest of small mistakes they have conducted. And I thank all the coordinators for that. And I thank the management of the Shastra University, especially VC sir and as well as the Dean Planning and Development for their constant support, and the IT departments which have shown that much of efforts, and all the student coordinators who have shown their efforts. So on behalf of School of Law, I wholeheartedly happy and thankful to all the persons who have supported in making this program a grand success. Thank you.
Thank you, sir. We are truly honored to host such an eminent jury today, and it's a privilege for us to welcome such distinguished members from the legal fraternity. It is a true privilege and honor for us to have Shri N. Venkatraman, the current Additional Solicitor General for India and a designated senior advocate who appears in the Supreme Court and multiple high courts all over India. Born on 26 August 1965, he completed his law degree from the Madurai Kamaraj University in 1989 and began his legal career under the guidance of late Shri C. Natarajan. After several years of practice and professional training under his guidance, he commenced his independent practice in 2003 and was designated as a senior advocate by the Madras High Court in 2006. With over 3 decades of distinguished practice spanning taxation, constitutional law, regulatory matters, commercial disputes, arbitration, and intellectual property, he has appeared in matters of immense public importance before the Supreme Court of India and numerous high courts and tribunals across the country. We are especially grateful for his continued association with our institution. His contributions to our law schools includes delivering insightful KLF lectures and serving as the patron of the C. Natarajan Chair for Legal Studies, which has been actively supporting and promoting our moot court competition. We kindly request Shri N. Venkatraman sir to share a few words with us today. So you're on mute, sir.
Namaste. Dear Shastra University, Dr. Vaidya, Dr. Kalisharan, all the faculty members whom would have met several times personally, dear children of Shastra, and all the Moot participants across India. To think of even Nani for a minute can inspire anybody. One outstanding counsel, a jurist India has produced amongst many. There are many legends, no doubt about it, and many legends to come, many living legends. It's all a fact. But Nani ji has its own unique USP at every given point of time. And he had a flourishing practice for over 50 years, something not many could achieve. From day one, he was a success until he practiced till his last. So he will remain the Bhishma Pitamaha for the tax bar. That's something which he deserves always. So my only request to all the students is, whatever books published available or available in the net, anything authored by Nani ji, please read it. It will inspire you. It will give a lot of clarity. It will impose a lot of logic, and it will make you think independently and make you feel the greatness of this country, the greatness of our constitutional institutions, and how even during turbulent periods, people have stood in protecting the institution and safeguarding it. So we should be very thankful to Dr. Vaidya, how much he fought for. Otherwise, this move would not have continued at all. It was reaching that stage. It was he, Arvind Datta, and so many other good-hearted people together ensured that this move happens year on year. And they found out Shastra to be the asylum for it to happen in a very permanent way. So we have been associating with this institution from 2014 onwards. And once again, greet all the teachers who are working still and who had worked earlier. And Shastra is a center which promotes Moot competitions big time. They have dedicated teachers to train, and their court hall is very, very, it will give you a lot of inspiration to be a mooter. And therefore, it's right that Nani Moot is being organized here, year on year. I'm happy to be part of it. And to say a few words about the finals, it's not an easy problem. And first time we find 6 questions being framed. Normally they frame 3 or 4, not more than that. This time it has been 6. And the children performed exceedingly well. Outstanding performance. And within a short time given, we were able to read the memorials. Very, very nicely worded, very nicely prepared, intact with precision, and whatever needs to be covered on each of the questions, well made. So, and it was a pleasure listening to you. We learned a lot from each one of you, and law is a learning process. Remain humble, remain firm, work hard. Ample opportunities are there for lawyers in the future. So it's a good profession to be with, and good luck to each one of you. Thank you, Dr. Kalisharan. Thank you, Raghav, and thank you, the court officer, the court master, and Sagarika, and everyone else. And your doctor was saying how much you would have slogged. Yeah, we have seen when we are doing it physically, we used to see all those children running about here and there and organizing it so well. So good luck to all of you. Thank you so much for this opportunity. Thank you.
Thank you, sir, for sharing your experience with us. Next, we have with us Sri Aravind Pandian, Senior Advocate, Madras High Court, and former Additional Advocate General for the state of Tamil Nadu. Over the years, he's acknowledged authority in the corporate law, mergers and acquisitions, insolvency and restructuring, and tax law, and he regularly appears before the Madras High Court as well as the National Company Law Appellate Tribunal. He was earlier a partner at the well-known tax law firm Subbaraya Iyer Padmanabhan and Ramamani, founded by eminent tax practitioner Sri K.R. Ramamani. He has also had the distinction of serving as the Additional Advocate General of Tamil Nadu for nearly 8 years, from 2012 to 2021, during which he represented the state in several significant matters. Beyond his practice at the bar, Sri Aravind Pandian has also made notable contributions to the academic and institutional spheres. He serves as the specialist editor of A. Ramaya's Guide to the Companies Act and is the co-author of the Guide to Takeovers and Mergers. He has also undergone mediation training at the Harvard Law School and is the founder trustee of the Chennai International Center. We are truly grateful for his continued presence and support in the legacy of Sri Nani Palkhivala Memorial Virtual Tax Moot Court Competition over the years. I now request Sri Aravind Pandian sir to grace us with his valuable words.
Good evening, everyone. It gives me immense pleasure to be once again present in this privileged university for the finals of the Nani Palkhivala Moot. Dr. Kalicharan, the organizing committee, all my colleagues who judged, Mr. Venkatraman, Mr. Parsadi for the finals, Dr. Vaidya, students, ladies and gentlemen. I know we are online, so since Mr. Venkatraman has taken a few minutes, we have decided that we'll just speak for a minute or two. Echoing his sentiments, mooting is surely a part of life now. Unless you moot, you would not know the concepts of preparation and delivery. The jungle out there will be completely different from what you prepared in this way, but this grounds you a lot, grinds you a lot, and you will surely be in some way prepared for what you will face after a few years. Echoing again Mr. Venkatraman's words, the shades of difference alone, I won't even say the mark of difference, the shades of difference between the two teams or the various teams is blurring more and more. It's becoming tougher for us as judges to judge who's a winner or who's a loser. So whatever result, it's like a T20 match on a given day, are you a winner or not? That is all. That doesn't mean that you have not performed well or so. I wish I would say participants and everyone who saw this as only an inspiration to take from the finalists as well as the participants. I thank the organizers for having given me this opportunity to present. On another day when I'm physically present, I will surely add some more to what I would like to say. Since Mr. Parsadian, the program has to be on fast, I stop here. Thank you very much.
Thank you, sir, for your insightful words. Moving on, it is a great honor and a privilege for us to welcome Sri R. Parthasarathi, advocate on record at the Supreme Court of India, a registered patent agent, and distinguished professional with over 4 decades of experience spanning government service, international trade law, taxation, and intellectual property. He began his academic journey with a BSc in physics from the University of Madras, graduating with distinction. He later joined the Indian Audit and Account Service in 1979 and served the Government of India until 1996. During this period, he also qualified as a fellow of the Institute of Cost Accountants of India and associate of the Institute of Company Secretaries of India, completed his MBA from the University of Hull, and later secured first rank in his LLB honors from the University of Delhi. Since entering legal practice, Sri R. Parthasarathi has established himself as a recognized authority in customs law and international trade remedy laws. He played a key role in establishing the Anti-Dumping Directorate in the Ministry of Commerce and has personally handled over 200 international trade remedy cases. He has also represented the Government of India before the World Trade Organization in Geneva and has argued for more than 500 cases before the tribunals, High Courts, and Supreme Court of India. His principal areas of practice include trade remedy laws, tax litigation, and consultancy covering GST, customs, excise, service tax, VAT, and income tax. I kindly request Sri R. Parthasarathi sir to deliver a few words for us this evening.
Good evening to all of you. Thank you for providing me this opportunity. I'm just reminded of when this particular Nani Palkhivala tax moot was to be conducted. It has moved out of Bombay. I think I was first involved when it came to Shastra University about 10 to 12 years back, and was also instrumental in setting the problems for the first 5 or 6 years. And then, of course, after the what we had, the corona, etc. I lost touch with it. So I'm so happy to be again associated with this particular Moot and also with Shastra University. Not only in this Moot, Stetson and various other Moot competitions in Shastra, I have always been part of that. So it's a very great experience. I'm so happy today that I have renewed again my association with Nani Palkhivala. And I was just texting Mr. Venkatraman the last occasion when we were together in Shastra, when it was a physical Moot, etc., and having our lunch with the Vice Chancellor at that place. That's what I was just recalling to him during the inter-exam. So it's been a great pleasure. But compared to Mr. Pandian and Venkatraman, I have a slightly different journey, as Raghav pointed out. I was a civil servant for 17 years. And then, because of my international trade practice, I came into private practice. I was a principal partner with Lakshmi Kumaran for 25 years. And then in 2021, I've decided that I would try to slow down and branch into different areas. So that's my background. So the one thing which I liked, as both Mr. Venkatraman and Pandian had pointed out, and also over my 10 years of judging moods, I feel more than the participant, I gain. Because the moment these moot propositions given, I spend 3-4 hours trying to understand what the issues, what the case laws, etc. Because it's a learning experience for me as much as for you. But the more important point is, at such an young age, all of you are so very well coordinated in your thoughts, in your expressions, and in the way you argue. That gives me great pleasure to see this young field. It makes me feel young. That's more important for me. So I definitely wanted to congratulate at least the two teams which I was able to hear. Excellent performance by both the teams. As Mr. Pandian pointed out, very minor shades of differences only between the parties. So that, of course, you will come to know. So that's one, I'm very, very happy with this particular thing. And either the moot or in life, I liked law. Now I've been practicing for 26 years, more than the government, because that enables me to practice the Bhagavad Gita day in and day out. One thing which the Bhagavad Gita says is, you are a nimitta matrameva. You are only an instrument in the God. So why I win a particular case which is shaky, why I lose a case which is very strong, I really don't know. And what is important is the process. That is why karmanya vadikharate ma paleshu gatachana. So the process. So what you have done is going through the process, preparing the memorial, doing the research, coming out with the various arguments, how to put them. If there are counter questions from judges, how to answer them. That process, according to me, is far, far, far valuable than, of course, the final result. Of course, the final result gives the motivation, but that's what you have to do. And therefore, every day I learn in this particular profession, and I'm so happy to be associated with all of you. So I thank Shastra University for giving me this opportunity, and I congratulate and convey my best wishes to all of you. Thank you.
Thank you so much, sir, for your valuable insights. As we approach the conclusion of the 21st edition of Nani Palkhivala Memorial Virtual Tax Moot Court Competition 2026, we take pride in this incredible journey that has unfolded. This edition saw participation of 19 teams from across the country, including some of India's most prestigious law schools. The competition was conducted in virtual mode in multiple phases, with the pre-quarters and quarter-final rounds held on 14th of March 2026. After intense debates and rigorous arguments, 4 teams have advanced to the semi-finals, culminating in a grand and a competitive finale. The much anticipated moment has arrived. We now invite our distinguished judges to announce the awards. The individual awards will be presented first, followed by the winner and runner-up. Now, I kindly request Sri R. Parthasarthi sir to announce the Best Researcher Award.
I think the best memorial goes to TC2, Institute of Law, Nirma University.
Thank you, sir.
Thank you so much, sir.
Thank you so much, sir.
Thank you.
Thank
All
you,
the best. All the best. Best wishes.
Thank you, sir.
Okay.
Moving on, I now request Sri Aravind Pandian sir to announce the Best Speaker and Best Researcher Award.
The Best Speaker Award goes to TC1 Speaker 2 Shraddha Warrior of Dr. MGR Education and Research Institute.
Thank you, sir.
And the Best Researcher Award goes to TC04 Burnish of School of Excellence in Law.
Thank you, sir.
Congratulations.
Thank you.
Thank you, sir. Now, I invite Sri N. Venkatraman, sir, to announce the winners and runners of the competition.
Whom should I announce first, runner or winner? Okay, we'll announce the winner first. The winner of this 21st edition of Moot Court, Naniji's Moot Court, is TC01 Dr. MGR Educational and Research Institute. Congratulations to that team.
Thank you so much.
Thank you, sir. Thank you, sir.
Thank you, sir.
So the runner-up is TC04 Gentle Global Law School. Congratulations to all the whole team. Good luck to you. And we have one surprise announcement also to make. So all the three judges thought we should also announce a special prize or a recognition for the outstanding delivery, style, poise, equanimity, and intense preparation. So all the three converged in one name, and that goes to Vaibhav Kumar from the finals. Vaibhav Kumar from the Gentle Global Law School. Congratulations to him. Thank you so much for the opportunity.
Thank you, sir. Just a small correction. The team code of runner-up team is TC14, sir, and not TC0.
I'm so sorry.
TC14.
I'm so sorry.
Yes,
I repeat it
TC14.
again.
Yes.
It is TC40. I'm sorry. I took it as TC40.
Yes.
Gentle Global Law School.
Yes. Thank you, sir. As we conclude this remarkable evening, we extend our heartfelt gratitude to all the dignitaries, participants, judges, and organizers who contributed to making this competition a grand success. Your dedication and enthusiasm have been truly inspiring. Now, I invite Chiranjeevi Sai Nihant Reddy to deliver the vote of thanks.
A very warm good evening to one and all present here, and it is my privilege to deliver the vote of thanks on behalf of the Moot Court Society of Shastra Deemed University. I would like to extend my deepest gratitude to the jury of the final rounds of the 21st Nani Palkhivala Memorial Virtual Tax Moot Competition 2026. Sri N. Venkatraman, Additional Solicitor General of India, for taking time out of his busy schedule and for his invaluable expertise. Sri P.H. Arvind Pandian, Senior Advocate and former Additional Advocate General of Tamil Nadu, for his continued support that has aided in the success of several editions of this competition. And Sri R. Pardasarthi, Advocate on Record Supreme Court of India and patent agent, for bringing unparalleled expertise and insights to this competition. It is indeed a blessing and honor to have you all here amongst us today, sir. I would also like to express our heartfelt gratitude to the management of Shastra Deemed University, Revered Chancellor, respected Vice Chancellor, respected Dean Planning and Development, respected Registrar, and respected Dean School of Law. I would also like to extend our gratitude to Lakshmi Kumaran and Sridharan attorneys, the knowledge partner of this Moot Court competition and the framers of the Moot proposition. Further, I would like to extend my thanks to the Nani Palkhivala Trust for having confidence in us and allowing us to conduct this prestigious Moot Court competition. I would also like to thank Sri Natarajan Chair for legal studies endowed by Sri N. Venkatraman, Learned Additional Solicitor General, Supreme Court of India, and Senior Advocate, for supporting this Moot Court competition. A special thanks to the Civil Maintenance Department, Electrical Maintenance personnel, IT school support, print and electronic media, and the entire Shastra family, without whose support the success of this event wouldn't have been possible. I would also like to thank all the participants of the 21st Nani Palkhivala Memorial Virtual Tax Moot Competition 2026, whose enthusiasm has made this competition engaged and inspiring. Last but not the least, on a personal note, we are extremely grateful for the tremendous support extended by our faculty coordinators. I would also like to thank the various teams of the organizing committee, members, and friends for their involvement and participation in conducting this Moot Court competition. Thank you all for attending the event, and we hope to keep the spirit of Nani Palkhivala ji alive by conducting more events and contributing more to the legal field. Jai Hind. Thank you.
Thank you, Nihant. So we have come to the conclusion of the valediction ceremony, and we immensely thank you for your support and guidance for the final rounds. Thank you so much.
Well, sir, thank you, Dr.
Thank you very much, sir, for all of you. Thank you.
Thank you.
Namaste.
Namaste.
I'll exit now. Thank you.
Thank you. It was an absolute honor. Thank you.
Thank you. God bless you. Good luck to you, young man. God bless you.
All the best. All the best.
Thank you, Arvind. Pakla.
Thank you all. Thank you.
Thank you, Mr. Partha. Bye.
Thank you.
Thank you all.